Hey, rich friends. So, this is going to be the session for Sunday, December 22nd, 2024. And we're going to be talking about retests versus reversals in the market. And this is pretty much how do you know if the market is going to have a continuation pattern, or how do you know if it's going to actually break structure and potentially go the other way? And this all just comes down to support and resistance, like most things in the market. This is from a demo trade that I did on a video I recorded. I'm not sure why that trade, oh, it finally closed. But yeah, we're going to talk about retests versus reversals because sometimes it can be a little bit difficult, but it just comes down to knowing what you're looking for, taking thorough notes, and being patient. Patient is the basis of everything. So, a retest, just to give you guys a definition, a retest means the market has come back to a certain level, and a reversal means the market has turned around. So if it's retesting a level, that means it's literally coming down back to the same place. So we can see that here the market was selling and then it started buying, but it actually retested this level before it proceeded to go up. So a retest means that the market is coming back to a certain place. And when it gets to that level, you really have to use your indicators and determine if you think the market is going to continue what it was doing or if it's going to go the other way. Now, again, everything is price action, but I think the indicators add additional confirmation for this. So I'm just trying to find a section in the chart to give you guys a really good example of this. The markets have been a little wonky in December. That usually happens anyway. But maybe I'll just go to, let me go to a currency pair. All right, so when you start trading, you want to make sure you have your checklist. So you want to know exactly what you're going to be looking for and what you're going to be doing, because no matter which time frame you decide to trade, it's going to be the same process every single time. And it really just comes down to your patience and your thoroughness in your analysis. So we can look at Euro USD, and I'm just going to mark up some levels. I'm going to mark up some levels and I'm going to start here. So the first thing that I'm going to do is any point that your eye is drawn to on the chart, that's something that you want to highlight because it's something that you should pay attention to. Usually this is an area in the chart that has high activity, whether it's for buying or selling. Now, this is something that my eye is drawn to because that's a huge wick. That's letting me know that there's some resistance coming off the top. So I'm going to use a simple tool and I'm just going to highlight that. And any place that I see the market has had a strong reaction before, that is something that I'm going to highlight also. And you can do this as much or as little as you want, but it really just comes down to whatever you decide to analyze, making sure you're extremely thorough with it. So I can see before this period of time, the market was consolidating. So I'm just going to go ahead, instead of analyzing more data, I'm just going to dig further into the data that I have already. So I can see this was another strong area. And when I say strong area, I mean we can see the market pushed into this place. And then from this point, we didn't know that this huge buy was going to happen, but it happened. And because we can see that in the past, that is something that we want to highlight. The market had some strong momentum in this, right? Because when you're looking at your trades, you want to look at what is the trend? Is it going up? Is it going down? What is the momentum? What is the volume? And these are things that your indicators are going to confirm for you. So I highlighted these areas. I'm also going to highlight this area because I can see the market had a strong reaction because it actually sold, right? It started something. Even though it didn't get too far down, it still started something. So anything you see that has that, it just looks like your eye is drawn to it, you want to highlight it. So if you guys understand why I highlighted these four zones, You can drop a 7 in the chat. And the reason why these are important is because these are going to be the levels that the market can either retest, right, or reverse from. Now, if this was not even a retest or reversal, it's going to be a retest or it's going to be like a continuation. And I'll just explain what I mean just so it's not confusing. So we know that if the market were to sell, right, because it's already at a high point, and you guys can drop in the chat, what is the highest point that you can recognize on your chart called? What type of high is this? Yep, swing high, higher high. Yep, both are correct, but swing high is the point that's the highest place that we can see. Now, this is important because from this place, the market can either create a new high, right? Making this not the highest high and not the swing high, or the market can come down from this point and it can sell. And if it does sell, we know that it's going to be coming down to the areas that it bought from before. Simply because the market is literally always going up and down and it's always going to be revisiting the same points. So once you highlight those areas, you can also get a horizontal line, right? This just makes it easy for if you need to zoom out and just have additional confirmation that this is a strong area of resistance or support. So I'm literally just putting horizontal lines to overlap where the circles are in my chart, right? Because the circle is going to be the zone that I want to look at, right? I can move my horizontal line from the top or bottom of the zone, right? We're just looking at where the price action happened. And the horizontal line is going to be an even more specific price that we can target, right? Because when you enter your trades, you need to take profit and you need a stop loss. So when I zoom out, I should be able to see other places in the market, right, where it also reacted off of, right? Even though we didn't analyze this data, we can see other places in the market where it reacted off of, right? Similar to the ones we did mark up, right? And if you guys can see that, just drop some sevens in the chat. And the reason why I'm highlighting this is because understanding support and resistance is really at the core of having good entry points. And understanding your indicators and price action and candlesticks are going to be at the core of helping you determine if this market is going to break out, right? Or if it's just retesting that area and if it's going to come back down or go the other way. So in this case, we see that it's at a swing high. Usually when it's at a swing high, we want to prepare to sell, right? That should be the first bias that we create. Okay, the market has created a swing high, right? And I'm just going to highlight that in the midst of creating this new high, it broke structure, right, from the previous dance it was doing. And not only that, it broke above the previous swing high, right? So if you guys can see that, just drop a 3 in the chat. And this is important because when you're asking yourself these questions for your analysis, one of the questions you can ask yourself is the market at a swing high or a swing low? If it's at a swing high, that's going to be a bias for a sell. And I'm going to go to the next candle because you wouldn't want to get in for a sell right off the bat because we can look at our stochastic and see some buying indications there. Now, if you're confused, you just don't take the trade at that point in time, right? When you have a clear setup and all of your confirmations align and you have the answers that you need to the questions that you're asking, that's when you take the trade. So right now, a new high was created, but are we going to act now? No, we're going to wait and see if the next candle actually reverses off of this swing high point. So let's see what happens. And we can see that the next candle, it didn't get as high as that high. right? So that lets us know that the market could be potentially staying in this zone, right? And not only that, and I think this answers your question, RJ, this because this candle didn't open as high as this candle and it actually just came back down to this level, that could be a sign for a reversal, right? That could be a sign for a reversal. But we don't want to just jump the gun, right? Because this is the next candle. And remember, you can do this on any time frame, but the market came back down to this level like we knew it would. But what we would be looking for to know that is this market just retesting this level or reversing, we want to look at our indicators now, right? So our stochastic is facing down. The orange line is above the blue line, and both lines have crossed below 50, right? So some questions I ask myself with the stochastic are which line is on top? If the blue line is on top, usually the market is buying, right? And I'll just highlight that here. We see the blue line is on top right here. And then we can also see the market was pushing up at that time. We can see that the stochastic crossed above well, a few significant levels. This is 20, this is 50, and this is 80, right? I ask myself, has the stochastic crossed above or below, right? 20, 50, or 80. You can make that one question or you can make it three questions to have your analysis a little bit deeper. And we get a yes. So the market's going up. But back to our sell example. Is the stochastic facing up or down? It's facing down. That's a sell confirmation. Has the stochastic crossed below 20? Oh, sorry. Has the stochastic crossed below 50 or 80? And it has. And we also see that the orange line is on top, making this a strong confirmation for a sell. Now, if this is a retest, right, we would have had more buying confirmations here, and the next candle would open above this level and the market would go up. But if it's a true reversal, we have all our sell confirmations, the market should sell and it should come back to this significant level. So we're going to see, because at this point, if it's reversing, all it's doing is literally reversing and revisiting the previous levels that it's already been before in the opposite way. So let's just press play and see what happens. So firstly, we can see that it broke structure on the downside. The confirmations on the stochastic were correct in that case. And then it came to a previous level, right? Anytime your support level becomes your resistance level, that's a sign that the market is going to reverse. Literally, because everything is switching sides, right? If that's making sense, y'all drop a 7 in the chat. So it makes sense for you to take the few minutes to draw these lines, because you can sit here and guess what's happening, or you can just use previous price action and data. Oh yes, I'll say the reversal part again. So when you see that previous support, right? And this is previous support because support is at the bottom. This is usually a place in the market where candles push into the area and then it buys. When your support literally becomes your resistance, that lets you know that the market is going down, right? Because a place where people were buying, they're now willing to sell at that same exact price. They're willing to sell at that same exact price. So I'll just keep this same example going. So I'm going to press play and I want you to just look at where the circles are. And if it was an area of support and it becomes an area of resistance, that's a sign that the market is going to continue to go in that direction. Things are switching. So even still, market tried to retest the previous high. It tried to retest the previous high here. It failed. right? Support becomes resistance. The market falls. Support again becomes resistance. The market continues to fall. So if you guys can see that, and I'll just zoom out. I don't know how far back I went in the chart, but I'll highlight other areas of support and we can see if they become resistance, but we can even see, and this is why it's nice to add your horizontal lines because it goes all the way across. And we can see, you guys can see that this line here was a strong area of support for a very long time, right? A couple of times it came back down. Drop a 7 in the chat. You can see this line was a strong area of support. Now, as I press play, it may become an area of resistance, right? If it becomes resistance, this is the market has reversed and it's going down. If it goes back to an area of support, then it was just retesting that level, right? Just like it did multiple times before. Like now, this is actually the point where you would know. Well, probably if I was looking at it on a weekly time frame or the daily, right? This is the point where you would know if it breaks past this level, since this is such a strong area of support, if it's truly going to keep selling. So we still have our sell confirmations on the stochastic, right? You guys can see the sell confirmations on the stochastic. Just drop a 7. And I'm just going to press play and we're going to see what happens because I don't know. We're going to see if it was a retest or a reversal in real time. All right. This is so nice. Like market structure is just it's just market structure. Like once it's there, it's just there. And we can see that it actually was still supported at that level. But we can also see that lower highs are being created overall. Oh, look at that drop. That's crazy. That is crazy. Lower highs were being created. If we were to put a trend line here, we can see overall. And this is cool because it's like if I was to go to the 4 hour and the weekly, it would be like how we typically do our analysis, but backwards. Like it's getting bigger and bigger. But we can see how over this much time, I'm not even sure how many days that time that is, we can see lower highs were being created, ultimately saying that this was a selling trend. If you guys can see that, drop a 7 in the chat. Let's actually see how long that was. Oh yeah, see if this was the weekly, this would be 2 full weekly candles because this is 14 days. So let's actually go to the weekly and we should see 2 strong selling candles. Oh, and that's exactly what we see. Let me hide this stuff, right? So hopefully that was a nice demonstration in time frames too, because usually we do it from the top down, but we just did it the opposite way. So we can see how once we zoomed in, we saw all of that resistance and support and consolidation on the small time frame. But then when we look at the weekly, we can see ultimately it was 2 red candles over 2 weeks. So does that make sense to y'all? And does the retest or reversal theory make sense as well? If it makes sense, drop a MS in the chat. And we will the markets have literally been wonky. Like this is consolidation, but we can try to look at something. Let's look at it for the week since it's so wonky. Okay, good, good. I'm glad it's making sense. So we just going to do this. This is pretty high. Ooh. So we are just going to do this analysis on Euro USD on the weekly, following the same principle. So I want you guys to do this analysis with me. And if we were to start our analysis right now for the week on Euro USD, what is the first thing that you would do? Right? And the answers may vary, but I'm just going to follow along and see if we're going to get a good analysis together. Check the news. Good one. So let's go to forexfactory.com and let's see what's going on. Okay, we got some CAD news in the morning. That doesn't look too crazy. We know that Christmas is on Wednesday. Christmas is on Wednesday for people who celebrate. So it's looking like it might be a slow trading week. Like it might be very slow. So this is the type of week that you would want to scalp on. If not scalping, then maybe wait until next year to trade. So we'll focus on some smaller time frames and hopefully we will see something. But if nothing comes up, I'm not going to force it. You shouldn't force it. That's how you lose trades. So I'm not even going to start on a week. Um, but I will analyze the weekly candle, if that makes sense. I'm going to use a horizontal ray. I'm going to turn on magnet mode because I want to lock this to this price, right? I want to lock it to this price. Okay, so look for swing highs and swing lows. I'm going to lock into the weekly candle and go down to the day. Actually, the hour. All right, so look for swing highs and swing lows. It's way past the swing high. It's way past the swing high. And you never want to get into a trade after the move has been made. Like some people have FOMO. Like they'll look at this and be like, oh my God, it's selling. I need to get in now. It's like, no, you need to wait. All right, so we don't really have that many swing highs and swing lows to locate. What is the next thing? Next thing, check the stochastic time frame. Check the time frame. Because you want an hour time frame. Check the lower time frames, okay? Now, what does this look like to you guys? Does it look like a buy, a sell, or a wait? This looks like, yes, it looks like it's consolidating. It looks like it's consolidating. Like we can highlight these levels, but it's so close to breaking a new low. If anything, I would literally wait. Like even on a 5 minute, it's consolidating. Like this is not the type of market that you want to trade in. So do you guys see the difference between this type of market that's moving sideways where we don't really have that many points to target? And even if we do use this and this, it's like it's really not worth the trade. Trading in this type of market versus the analysis we just did where we can see that there was a clear trend, right? Now you can try to do this, but it's gonna stress you out. So let's just look at something else because this is just there's nothing going on. It's probably gonna be the same with most USD pairs. Yeah, just wait for a move. You can mark up your charts, but if you don't see nothing, it's like literally just mm-mm. All right, USD CAD. This looks a little better, but it's not too promising. But we are going to do the same process. It's always the same process, y'all. You just got to get used to being disciplined and not going off of just going so fast. And also, Amanda, before you check your stochastic, right? Before you get comfortable with checking your indicators, you need to focus on the price action. So the next step was actually to mark your highs and lows with your horizontal lines. So basically identify key levels so we can double check where we're going to be, the areas we're going to target. All right, so this looks like it could be a sell. This is given sell because we can see that it's already bounced off of the swing high. And then we can see that every time it tried to get to that point again, it just hasn't gotten back to that point. We can see we have a red candle here. We can see that our stochastic is facing down. The orange is above the blue, but we don't have our stochastic below 80 for the orange or the blue. So we would still want to wait. But if we were to take a trade on USD CAD, it's setting up for a sell, but it's not quite the time to make the move yet. We still need those additional confirmations. Again, I don't know if you guys watch my grade your trade video where I go over a list of questions that you can ask yourself and count the confirmations. So 3 confirmations are good. It's like a C plus trade. 4 confirmations are great. That's a B plus trade. And 5 confirmations are fantastic. So when I ask myself, is this market close to a swing high or a swing low? It's close to a swing high. That's 1 confirmation for a sell. I can ask myself, do I see a red candle or a blue candle? I see a red candle. That's a confirmation for a sell. I can ask myself, is my stochastic facing up or down? It's facing down, which is a sell confirmation. Is my orange or blue line on top? Orange sell. Has one or both lines crossed below 80? No. So right now I have 4 confirmations. So this is a B plus trade. So yes, I can get into a B plus trade and I can take my chances. And it's a really good setup. Or I can wait for additional confirmations and wait for A plus setup. Right? So when I come down to the 15, we can ask ourselves the questions again. And I'm just going to go through it quickly. Is it near a swing high? Yes. We could also add, is it near area of support or resistance? Or has support, previous support, turn into resistance? Right? We get another yes. That's a really strong selling confirmation. We can ask ourselves, is the stochastic facing up or down? We get down. We get orange on top. We get both lines below 80. One line below 50. So now we on 6 confirmations for a sell. And that's an A plus setup. So you know what I'm gonna do? I'm gonna take that trade. And because I've already marked my significant levels, I would sell from 14422 to 14352. And that's about, if you ever want to count your pips and you want it to stay on your screen versus using the ruler, you can use your info line. So I'll go from the point I want to go to the destination, and that's about 72 pips. It's about 72 pips, right? But that's not really bad. 72 pips for, I don't know how long it could take. We don't know. But we know that you can potentially secure 72 pips if you were to take that trade, simply because it's a high likelihood that the market is going to revisit that level. So if that makes sense, y'all drop a 7 in the chat. And if you see the sell set up, you can also drop a 7 in the chat. If you don't agree, you don't have to take the trade, but it's so many confirmations, like support has become resistance, it's bouncing off of the swing high, it's near an area of resistance. We get all of those signs on the stochastic, right? It's looking like a reverse. And we can even want to look on a week, we can wait it out. Yeah, you definitely can. Just make sure you have the confirmations that you need. If you want to trust it on a higher time frame, you can do that. A higher time frame is always going to give you, I would say, a stronger confirmation, right? But yeah, gonna be up to you, but definitely take notes on that. We can see how this trade will play out. I'll probably be updating y'all in the chat because y'all were in class, so y'all will know, right? So that's a potential trade idea. We can also look at gold, right? Gold is always nice. Even on smaller time frame, gold is nice. And it's the same process. The only thing different with gold is like how you count your pips. How you count your pips. So we're going to go ahead and follow the same process. We're going to highlight some key areas where we see the market had a strong reaction. And with gold, I feel like the more places you can highlight, the better. I should have probably even started on an hour, but I wasn't seeing much structure on that time frame. Like it should really be like clockwork. It should be like second nature. Like trading shouldn't stress you out. I mean, sometimes it will just because it's like you don't know. It could be so close to your area of support and it could be one pip, but just let the market do its thing, honestly. Just let the market do its thing. Gold. I feel like gold is going to, yeah, it's definitely giving sell vibes. Definitely giving sell vibes. So yeah, gold is giving sell vibes. We can see some key levels even on the 15. We see it's already rejected off of here. We see we have a new area of resistance that's been created here. We can see how support became resistance. If you guys see that, drop a 7 in the chat, right? Support became resistance. So if you didn't want to get in, I mean, market execution is always going to be risky with gold. But if you wanted to be safer than sorry, you could set a sell limit at 2604. And then your TP would be around 2590. And that's about 1400 pips. And we have strong confirmations on the stochastic. Okay, and a sell from Friday market last week pending order. That's good. Because gold is it moves quick and you can secure so many pips. I'm just trying to see where it would potentially sell to. Because I think not last week, but maybe the week before, I was like, it's gonna sell back down to 2580. So yeah, gold 2617. Okay. All right, that's not bad. Yeah, it's gonna come down. It could potentially come down to 2549, and that's already like 5,000 pips. But if you want to be safe than sorry, I would just wait to see if gold sells. And if it gets lower than 2590 on the higher time frame, then definitely sell. Because even if you miss all that action up here, that's still 5,000 pips, which is not bad at all. Or even if you sell from this point, 2598 to 2583, which we can see is the low marked here, that's about 1,500 pips, which is really not bad. Let's see on an even smaller time frame. Yeah, this is a little wonky. So you could set a pending sell here, 2,600, down to here, 2,590. That's 1,000 pips. Well, I would also just wait until it breaks structure. So if it gets lower than 2,595, then I would say it has a stronger likelihood to sell. And I hope you guys are following along. I'm literally just looking at previous levels, and if this level becomes, like I said, the resistance level, then of course that'd be a place to sell. Right now, we can see this is resistance. It was support. It was the most recent support, and now it's resistance. So that's kind of a sign that it's going to come down and maybe break this support and come down to that level. Because remember, it always retests. Gold always retests. No matter how long it takes, it will always retest. And I'm gonna just like just scroll on my screen, and I just want you to look at every two candles essentially, and you'll see gold always retest. So if it hasn't retested, no matter how far off it gets, it's gonna come back. And if you guys can see that gold is always retesting, just drop a 7 in the chat. Because that's one of the really nice things about gold market structure is that it's so clear. Like if it hasn't done the thing, it's gonna do the thing. Like you just wait on it. Like this is a really good example right here. Gold was at this level. The next candle didn't get back up to that level. It actually sold so many pips. That looks like a lot of pips. And then eventually it came back up to what? Retest that level. It's always going to do it, no matter how long it takes. Here's another good example. Gold was at this level. The next candle came back down. It didn't retest. Gold bought all the way up to here, almost 1,000 pips. Gold came back down to do what? Retest that level. So you have to be patient with gold because it could look like it's not gonna happen and it's gonna happen, right? It's gonna happen. So we can see gold hasn't yet retested this high. That's why I targeted this high, 2,600 for a potential sell limit. And then I targeted this TP, 2,590, because gold has also not retested that level yet. So we're gonna see what happens. Again, it's like I don't like to impulsive trade anymore. I've done that so much. I'd rather just mark up these things that I see, and I'd rather just trade what I see versus trade what I want, right? Because I can be like, oh, I want gold to buy, but it doesn't matter what I want. It matters what is happening on the chart, realistically. We see gold retest at this level. It has to retest this level, right? But that's really all for today. If you guys want me to review anything that we've done on this particular class, let me know. Or if you have any additional questions that I haven't answered here in the chat or in the YouTube videos, also let me know. Because based on the questions that you guys ask, I always make my videos based on those things. And how do I answer this in the most short, concise, and clear way? Yes, the market is going to do what it's going to do, not what you want it to do. And I like the fact that it works on patterns and we can see like on every single class and almost every video that I post, I provide examples that gives you proof that the market is going to repeat itself. So it's not the market. When you lose a trade, it's not the market, it's you. Like it's really you because all you had to do was wait, right? All you had to do was be a little patient. All you had to do was trust your analysis and trust your markup. And I say how you do one thing is how you do multiple things, right? How you do one thing is how you do multiple things. So if you're not trusting the setup and the analysis that you did, what was your thought process when you went into the analysis? Why would you do something and take a trade that you don't have faith in? That doesn't make sense. It's like, why would you pack for a trip if you don't think you're going to go? Why would you work towards something that you don't believe is going to happen? So you just really have to trust that what you marked up is going to happen. And then also accept that you're not always going to be right. Sometimes the market has breakouts, right? But as long as you're having good risk management and you're like, okay, that wasn't too bad, right? You're having good risk management, you will be fine. Like, this shouldn't be, everybody goes through this process, but there shouldn't ever be a point where you're consistently blowing accounts. This means that you are trading your accounts down to zero and they're having to fund up again. Because most people quit trading because they are funding up more than they're withdrawing. And that's just because they don't have a system to follow. They don't understand the market. They don't understand the nature of the market. They don't understand patience. And once you have these things once you learn to develop these things in your trading, why wouldn't you take those life skills to other areas of your life. Trading will really transform you as a person overall. Like, it's just not the trading that it's about the mindset that you're bringing into the market. The skills like discipline that you're bringing into the market, like self-control, like emotional control. Like, are you really going to, at your big age, continue to get mad every time something doesn't go your way? That just doesn't make sense. Like, save that for children. And that's something you should accept in the market. It's not always going to go your way. But if you understand market structure and you understand identifying key levels, then more times than not, it's going to go your way, right? Just focus on having a good win rate. Don't focus on being right all the time. Nobody's going to be right all the time. Even the greatest athletes and performers and artists, people mess up sometimes. The greatest dancers, they mess up sometimes, right? But they still get back in the lab and they practice and they get ready for the next game or the next season. And that's what you have to do with your trades. You just got to look at it like go into it knowing it's going to be a win or a loss, but of course you want it to be a win, right? You prepare for that. You practice for that. You trained for that. But if you are just going into the game sloppy, going on stage sloppy, going into your trade sloppy, of course you're going to have sloppy results. Like one plus one is definitely two. So you really have to look at how you're executing your trades. And this is going to take maybe taking a hard look at yourself, but how are you executing your trades? And how is that behavior reflected in other areas of your life? Do you even care about trading as much as you think you do? Right? Do you care about your financial success and freedom as much as you say you do? Are you serious about this? Like, so these are things you're gonna have to really ask yourself and get real with yourself and just do it. Honestly. Y'all just do it. Right? Just do it every day. Because one day you are going to have the results that you want. If you tell yourself every day, I'm going to be a six-figure trader, trading is going to pay my bills. I can do this. If you tell yourself that every single day and you're actually working towards it every single day, why wouldn't one day be the day that that thing actually happened if you're actively working on it? You are not going to get blessed or rewarded for the work that you pretend to do. You can tell me you're going to do these things, but I'm not paying your bills. The market is. So had a conversation with the market, right? You need to have accountability to yourself, to your account. So everybody get your head in the game and yeah, just trust yourself. We do the same thing every single week. Every single week. I appreciate that you guys show up, but I hope that you are digesting the information. I hope that you are rewatching the videos. I hope that you're taking notes because those are ways that you can like commit this stuff to memory and really get it done. Like you should have at least 5 minutes a day to watch a video and learn something and be like, wow, let me just actually try that out right now. Right? I tailored my content to quick learning for people who just want to rush the process, right? And say, I get it. Yes, you do get it, but you just got to hear it again and again and again. And that's why the videos are so short. I don't have to go into detail. I don't have to say 200,000 words for you to get the concept. You just have to watch the video again and want to understand the concept. And then you'll realize one day when you really decide to do that, how easy it was and how this actually worked. It makes sense. And you should have just did it a long time ago. What's the point of watching the videos if you're not going to practice what is being taught, right? And I'm just saying all this to say that you really have to trust the process, right? You're not doing this for no reason. At some degree, you believe in this skill and you believe in yourself, even with just a mustard seed of faith, that this is significant to your life and it can change your life. But if you believe that, you have to start taking the actions that Align with that because your dream life, whatever you deem as peace, is not just going to happen. It's something you're going to have to actively create every single day until one day you've made the full transition to your new life. This is not a movie, y'all. This is literally real life. You're not just going to wake up in your dream home. You have to start thinking about what is my dream home? Where is it? What does it look like? Do I need to build it from the ground up? Does it have three bathrooms, four bathrooms? Does it have a backyard? Because once you have the concrete image of what you want in your mind, now you have something real to work towards. Now you can start looking for realtors or whatever in that area. Because now you know where you're going. You know what you want. Now you know how much you need to save. Now you know how much effort you need to put into all of your channels of income to get the desired result. But it starts with being real with yourself and knowing that you can fantasize and dream about it all day long, but until you take the first step to get real, you're not going to get no results. So that's really all I have for you guys today. If you have any questions, again, feel free to ask them or comments, concerns. Uh, yeah, I'm definitely open. But if not, I'm going to say that's all I have for you guys today. Until next time, rich friends, you're welcome.